So why is it that dealers are so afraid of cancellations and chargebacks on loan additions, loan add-ons? Well, there's a very little known clause in the Federal Trade Commission regulation called the CARS Act. The CARS Act is a very specific rule that requires car dealerships to abide by certain conditions. And when they violate those, they have a lot of penalties. And the CARS Act is very clear on what they can and can't do. Here's an example of regulation enforcement of the CARS Act. Now, this is from 2024, at the end of 24, so about a year and a half ago. The FTC, this is their official press release from the FTC, and the Attorney General in the state, so both the federal and local governments are in on this. They are regulating a dealership from falsely touting low prices and overcharging consumers. So if you have a car loan, what probably happened is you went to the dealer, you negotiated a price, and dealers are very sensitive to price because you're going to shop around. You're going to see prices online, you're going to see prices on the website, and then they're going to give you a lowball price, maybe even agree to the price, but they're going to make up for it in finance. And the way they make up for it is by slapping these add-ons onto your loan that you probably didn't know about. Maybe you did know about a little bit, but you didn't know exactly how much they were going to cost. And this particular enforcement is just one of hundreds that show how that works. So let's take a look. The first thing they do is the dealership, in this case the dealership is called Lindsay, but we're not going to pick on them because many dealerships do this. They advertise a price and then claim that consumers have to obtain financing through the dealership. Right? They say you have to finance with us to get this price. And some dealerships will still come out and say this. We did some canvassing of some stores around the country just this week. We looked at their price online, saw it was a low price, and called them up and said, yeah, but you have to finance with us. If you don't finance with us, it'll be higher. Then what they do is they do a bait and switch advertising, and then unwanted add-ons are put on the loan. And what does the FTC, this is the director of the FTC's Bureau of Consumer Protection, what do they say? They say if you're an auto dealer and you trick consumers with unwanted add-ons, you should expect to hear from the FTC. That's why dealers are afraid of this. The FTC and state partners will continue to work to combat this illegal contact. This is considered illegal. Then they start with the financing. When you finance through the dealership, they get a kickback from the finance company because their rate is probably going to be higher than what you could get from your bank or your credit union. So the bank that gets the higher rate, they'll give some money back to the dealership, so they make some profit there. Then they start putting add-ons on the loan. They systematically charge consumers for add-on products, extra service plans, tire protection, guaranteed asset protection, and the consumer either did not consent or they were told it's mandatory. Now, one of the things that these dealers now will do is they'll disclose that the add-on is put on the loan, but they don't tell you how much it is. They might tell you, hey, it's only another $10 or $15 a month. But it's really much more than that. It's really thousands of dollars added onto your loan on the back end that goes into your payoff that gives you a higher negative equity when you come time to trade in the vehicle. So because of that, this one dealership was charged with a complaint by the FTC, and the state also has a similar Consumer Protection Act. Every state has a similar version of this. So the state and the federal government can both come down on it. So when it comes time to look at your negative equity on your vehicle, to try to sell your vehicle to get out from under an upside down car loan, you want to look at all your cancellations, all your prorations, and what contribution that dealership is willing to make to cancel some of these add-ons. Many times when you try to cancel it, they'll tell you, well, it's a prorated cancellation. So if you have a 5-year loan and you're 3 years into it, we're only going to give you back 40%. You should be able to cancel the whole thing. So that's what you want to ask for, a full flat cancel, because you never used it, it was never a value, you didn't agree to it. They might show where you signed something, but many times you signed it on a tablet where you didn't see the whole contract, you just saw the little box where your signature goes. So this is where the enforcement of these rules comes from for the dealership comes from the Federal Trade Commission at the federal level and the Attorney General at the state level, and both of those have jurisdictions over the dealership. Now remember, we're not attorneys, we're not giving you legal advice, but this is how the loan exit process works. You chop down your payoff by getting rid of these silly add-ons. Many times there's $5,000, $6,000, $7,000, $8,000 worth of add-ons put on your loan, and that could erase half of your negative equity right there before you even get into better valuation. So don't let them win. Don't let the dealership win. Break up with your car loan, get out of it so you can move on to a better payment on a different car or a car that suits your needs better than what you have now.